All right, good morning, everybody. Welcome back into Mining Stock Daily, and we're going to continue this morning with some market commentary and analysis, and continuing to come off the tariff news as things, I guess, are being digested a little bit more. There's a little bit of headlines coming out of the White House. Obviously, now we have 70 countries coming to the table, supposedly. So we'll see what more of that news comes out of the White House and the administration. There was a lot of news, and not a lot of news, but some analysts from some big hitters, including Ray Dalio. That was an article out of Ray Dalio's team that was published here in the last, 24, 36 hours as well, that deserves some attention. And so, what's left for this week? And obviously, we're also going to talk about the bond market here with Chris Temple of National Investor. And before we get started here, Chris, just a quick note for everybody listening in on the podcast. Because of really the volatility of the markets and the implications of a real change in economic and trade order, we are going to publish this episode on our YouTube page as well. So anybody who's connected on YouTube and follows us can find it there. So Chris Temple of the National Investor. It's been an eventful week. Holy cow. Economic history is being made in front of our very eyes. Changes are made. And, maybe we start with, that note from Ray Dalio that you also republished on your Twitter page, really keeping the attention with the readers to say, stay focused on the future. It's not just delve into, the ramifications of a tariff or a trade war, but what this means in the grand scheme of things. And, this is something you've been writing about for a long time as well. So you and Ray have obviously been sharing notes, but really talk about this and really the importance of seeing the long-term ramifications.
Well, look, first off, Trevor, as always, I'm glad to be able to spend some time with you here. The biggest problem that we have with all of the intelligentsia, the economists, the politicians, everybody, is that they're all coming at this whole tariff thing with one or the other form of TDS. They either have Trump derangement syndrome or they have Trump devotion syndrome. And one of the things that Dalio said this morning in a CNBC interview, he said, look, I'm not ideological about this. I'm looking at this as I would if I was a mechanic. Let's look at the big picture. Let's look at this clinically. The fact is that long before Donald Trump came on the scene, even in Trump 1.0 back in 2017, there were trends afoot in this world where, for various reasons and in various ways, the global regimen of globalization and free trade was in retreat and was being unwound. We're seeing regional factions develop. We're seeing the BRICS overrated, though they have been. Still, it's a story. We're seeing President Trump himself, quite correctly so, understanding this trend and realizing that in times to come when he's long gone, under his beautiful, big, beautiful orange tombstone, that we're going to have a different world where hopefully, for our sake here in the US, we still have some major relevance in the world, but it's going to be much more as a regional or hemispheric power for a lot of different reasons. Now, against that, what Dalio has pointed out is that you've got all of these things that are peaking right now. Debt imbalances, along with trade imbalances, monetary issues that are intractable. And one of the ways, I'm sorry to say, that the president and the Republican Party are hurting their own cause is that they are wholly unserious about cutting spending at all. We've already been guaranteed, thanks to the Republicans' continuing resolution recently, that we're going to end fiscal year 2024 with record government spending still and with a higher deficit than what we had under Joe Biden. Trump just made that worse. He's gone quickly from wanting to rein in the military, something that Elon Musk actually takes seriously, unlike Trump, to now we're occupying part of Afghanistan again. And he's bragging this morning about the first $1 trillion military budget in history. So the king of debt is going to blow up the budget at his present course and undermine everything he's doing, good and bad. including this tariff war, which is constitutionally dubious to say the least.
With all this mess is kind of going back against the campaign word or even, the promises in the first couple of months of the presidency. It makes me question the strategy altogether here, Chris. And Dali is absolutely right. Keep that trajectory long term because things are going to change. What that looks like when all the dust clears, which we are probably years away from. When all the dust clears, the world will operate differently, look a little bit differently. There will be a new order in town, monetary, economic, trade-wise. What that looks like is yet to be seen. But the strategy of how to get there has just been a complete debacle. And I go back. We know that President Trump, with all his faults and failures, he's not a great communicator. He loves to talk, but it's just a lot of words. And so, would it have been better if this really was where he wanted to go, to just be completely transparent, to say, the world is changing. We want to get out in front of this. We get out in front of this by doing this. There will be short term pain, but the long term gain would be this. But instead, he comes out with a complete mess of a chart on Liberation Day. The markets react. Now he's not going to back down because that's not his MO. He's not the kind of guy that says, you know what, too soon. I'm sorry. We're gonna correct this. He's going to stand by it. Now he's going to go move to the next thing, which would be the tax cuts, and that's going to have problems because he does not obviously have support of the bond market, which is the big give and tell. You lose the bond market, you lose a lot more than just an office. So it's just, don't you think, could it have been a little bit more transparent, better communicated to the people, to the markets, that this is where they were going, and maybe a lot of this pain would have been alleviated?
Well, absolutely, Trevor. And again, when you look at the big picture of what Trump is doing, I don't disagree with parts of it. Again, we are going to see in the years and maybe couple of decades or so in front of us a reordering of the world, of debt, of trade relationships, and all of these things. It's inevitable. It's a matter, as I've said repeatedly on so many issues, even before Trump got inaugurated. This is all a matter of simple mathematics. But when you listen to the rhetoric, and it's not just the president, Peter Navarro, in my opinion, at least can articulate things in a halfway decent way. Howard Lutnick went to the Donald Trump school of gibberish because a lot of what comes out of his mouth, as I hear it, just makes no sense in a clinical or practical or any sense. Besson is doing the best he can, being dealt a bad hand, I think, as Treasury Secretary on a number of fronts. But look, I've said many times, and I said back during Trump's first term, that I oftentimes think I'm watching an All in the Family rerun and I'm listening to Archie Bunker and Barney Hefner and the boys all venting their spleens down at Kelsey's bar. They're identifying the problems correctly, and Dalio even alluded to this morning. But as far as the solutions, it's not very well thought out. It's all over the place. And again, you see glimmers within this of Trump wanting to get to that end game of U.S. having its manufacturing reinvigorated, which there is really virtually no game plan for. It's a practical matter, policy-wise or budget-wise. So this is one of the ways in which this whole tariff thing on some fronts is idiotic, because we don't have anything in place to quickly replace what we're trying to put tariffs on. But he does seem to understand that, yes, times are changing, the world order is changing, and all these different kind of things. But then the neocons get a hold of him again and tell him he's got to break his promise on the military, break his promise on Doge and the whole thing, and blow up the budget just with military spending. And of all things, going back into Afghanistan. And of all things, threatening war against Iran, which is not just bombing a few families in Yemen. That's a whole different kettle of fish if we get there. So, this is just not well thought out, and it might have a better outcome if we weren't starting this whole thing from a point of 36 plus trillion in debt. And to your point on the bond market, we had the single biggest percentage move higher in long-term yields in yesterday's trading Monday of any day I remember. I didn't see
It
it.
was
What the
amazing.
Yeah,
And
and
it was kind of forgot, or it was kind of hidden in the background because of the
yeah.
huge swings in the equity market.
Right. But when you went from sub 4% to 421 or whatever it was at the close yesterday, that's a 5% move in yields. You can have moves like that in extreme days, as we've seen recently in the stock market. That's very unusual when it comes to the bond market because he is going to have the bond market vigilantes turn on him. And here's the other thing about this that the average person just doesn't understand. And Rand Paul made some great points about this in his interview this morning, right after Dalio on CNBC. This idea that somebody's getting ripped off and that you've got this mercantilist mentality, which Trump obviously has, that you've got to have a winner and a loser in
Hmm.
transactions. That's not the way the world works, nor should it work that way. Part of the consequence, good and bad, of having the world's reserve currency, which we've had pretty much since the end of the Second World War, is that by definition, other countries must run trade imbalances with you. That's how they accumulate dollars, i.e., treasury bonds and others, dollar assets in the first place, to be able to transact business and goods and services globally in that dollar reserve currency. And nobody in the administration has answered the simple question of what that leads to. You're saying, wait a minute, okay, Mr. President, if we do away with this, who the hell's going to buy our debt? How are we going to finance this? Don't tell us anymore. Don't urinate on our backs and tell us it's raining that you're going to cut the deficit and debt and everything like that when you've enabled the Republicans on Capitol Hill to continue the old spendthrift ways that the Republicans are just as bad at, in some ways worse, than the Democrats. So, yeah, the bond market is going to pass judgment on this very harshly as the weeks and months go by, especially when they want to raise a debt ceiling another $5 trillion, especially when he wants his tax cuts and so forth, and especially when they've already undermined every single thing that Elon Musk has done and all of these savings he's found. I mean, this to me is a much more in your face rejection of the most serious supposed effort to cut government spending since Ronald Reagan's Grace Commission, but they're both ending the same way.
Yeah. If Treasury Secretary Scott Bessent, I always pronounce his last name wrong. Scott Bessent and President Donald Trump want lower yields. Well, the end of last week looked pretty good, but 2 days into trading this week, and you're back above where last week started. So if you're just focusing on that 10-year, we've got an enormous amount of debt that needs to be rolled over this year, and it
Yeah,
seems looks like uh, uh, Bessent's task is getting harder and harder. And we haven't even started about having serious conversations about President Trump's tax cuts that he wants to increase. But we know it's around the corner. And I'm just kind of wondering if that's what the bond market is anticipating now, along with just kind of the lack of government spending cuts that they were anticipating. Do you think that's what the bond market's doing here?
well, I think that's part of it. It was also suggested yesterday in the context, obviously, of this intensified trade war that you've had some augmented or increased selling on the part of some foreign governments and foreign investors in our treasury market, seeing the handwriting on the wall as well. Here again, like the whole BRICS thing, I think that this idea that China, for example, which owns, I mean, it's 2% or something like that of our outstanding treasury securities these days. They've been pairing them for years. So it's not like they can single-handedly torpedo the bond market in one fell swoop, but they sure aren't going to help things if they sell at a faster pace some of what they still have left. So you've got that, you've got the budget, you've got all of this stuff. And again, this is from a government where of all the crazy things, President Trump recently equated one of the only statesmen that the Republicans have in the House, and that, of course, is Tom Massey from Kentucky, compared him as a turncoat and wants to primary him to Liz Cheney. I mean, of all the asinine things to say, and again, to anybody that doesn't have the pro-Trump version of TDS, Trump devotion syndrome, you look at that as I do and say, Mr. President, are you serious about this MAGA stuff or not? Because there you got a guy who's more MAGA than you are in the House, and you're calling him out because he doesn't think that you should go back on your campaign promises and undermine Elon Musk and all the rest of this stuff. And he's really serious about getting federal spending under control. So, this is, Trevor, I hate to say, because though, again, I voted for third party candidate this time around and was vindicated overnight when President Trump gloated about his $1 trillion military budget, because that's going to be a big part of the undoing of the American empire in its last days. I don't wish him ill. I want what he says he wants to succeed. But the old saying is actions speak louder than words. And when you cut through all of the rhetoric and all of the self-congratulatory talk, if you look at his actions, he is going to out Biden when it comes to debt. And I don't think he should be getting the pass for this. The bond market's not going to give him the pass.
Right, right. Can we focus a little bit of attention on relationships with China right now? I mean, it was souring, but my gosh, in the last couple of days, it's probably fell through the hole in the bucket. The trade war obviously escalated. There's reciprocal tariffs on both sides, threatening another 50% from the White House, and China's retaliating right now as well with more tariffs. There's a little bit of content propaganda going on online through the Chinese embassy in the United States, which I've seen. You did mention the U.S. moving military personnel back into Afghanistan, the Air Force Base, and there's probably a reason for that. It's not because we are occupying Afghanistan again. It appears to be because of a strategic location closer to China and its access to the region there. We just got word that there were Chinese soldiers captured by Ukrainian soldiers that were the Chinese seemed to be fighting for Russian military. So that's an interesting headline to follow here. There was moves of Chinese military surrounding the island of Taiwan once again last week. I mean, this is all. I mean, again, if you are just paying attention to markets and the volatility in the markets, you may have missed these geopolitical headlines, but I think they're important to note. It just feels like more of this is coming down the pipeline until some sort of important decision is made from either side. That leads us into a conflict that, again, President Trump campaigned that he didn't want to happen.
Well, look, here again, kind of similar to what we led off with and Ray Dalio's points, excellent ones, that you've got to look at the tariff situation and trade war within the context of all of these larger geopolitical and monetary changes. Part of that, Trevor, is that the powers that be in the U.S. have been looking for quite a few years now in a way to either isolate or neutralize China economically. It needs to be remembered when you hear rhetoric that China's been ripping us off. Well, who built China? Lou Learman, who once upon a time was a Republican candidate for governor in my home state of New York. I campaigned for him. He lost. That was in a heyday of Mario Cuomo, and there was no Republican going to beat Mario Cuomo in those days. But Learman made a great point. He wrote a good article in the Atlantic where he properly identified China as a mercantilist colony of the U.S. And it wasn't that China got up out of bed one day, or its leadership did, and said, hey, let's build up industries to screw the Americans. It was because they were literally built. They had their factories built by Western companies who made more money by moving their operations to China than they did here. So those were the people who were the guilty parties. It was not China itself per se. That said, they have used that manufacturing hub of the world and the money that they've accumulated over the years, but also with the world leading pile of debt, worse than anybody's got, to become a geopolitical and military power as well. And the people that in part helped to build them, said, okay, wait a minute, we didn't have this in mind. Now you're going too far. And so there's ways they want to bring them down. And this game plan has been on the table for quite a few years, even back during Trump 1.0, where I will give the president credit back then for not following the neocons into an all-out war against China. He wanted a fair trade deal with China. That's all he was interested in. He did not want to undermine China per se, just for the sake of doing it. And that's a reckless thing right now, and it seems as though he's getting pulled more in that direction than he did in his first term, and that's dangerous because not only the military implications, Trevor, but think about this. The people pursuing this policy right now of trying to isolate China, knock them down a few pegs, they are thoroughly of the view that they can do to China today what Reagan purportedly did to the Soviet Union during the end of the Cold War in the 80s. You know, we're going to borrow and spend them into oblivion. They won't be able to keep up. We'll wreck the Soviet Union by basically driving them out of business. We'll outborrow, we'll outspend them. And that pretty much worked. But when the Soviet Union collapsed, there were relatively scant consequences for global markets and the global economy. You had a few ripples here and there. You had the currency crisis in the late 90s, etc. But that was small potatoes in the grand scheme of things. Is a percentage of the entire globe's GDP. The Soviet Union wasn't even a rounding error. But now you're talking about the second largest economy in the world, and if the powers that be succeed through this tariff war and other means to pull the rug out from under China and its terrible debt situation, they take everybody with them. Not to mention, I would guarantee you pretty much that China, if it came to that, would use that chaos as an excuse to go in and take Taiwan. That would be one of the ways that they would shore up their domestic support, is that, look, we're not going to let the Americans and Trump, stop our ascent again as a major global empire. And if that's the way they want to play, here's what we're going to do. So very, very precarious time. And I do believe that there are signs emerging that the Trump administration does want to deal with countries like Taiwan, like Japan. They conspicuously exempted Canada and Mexico and rare earth elements and other critical minerals from these latest tariffs for a lot of reasons. We probably won't have time to get into those specifics today. So through this trade war that Trump unveiled on his so-called Liberation Day, you can see the geopolitical chess game here. That they'll go to the mat against China, like China promised to go to the mat with us overnight, but everybody else, maybe it will be Monty Hall, let's make a deal, because we want to turn the rest of the world against China.
All right, Chris, a lot to cover here, and I promise I try to keep it within 20 minutes, and I failed at that, so we better wrap it up. But 25 minutes isn't bad. Maybe the next time you and I chat, we can actually focus on those mining stocks. But those obviously took quite the hit here last week as well. But, we'll see how the markets stabilize. We'll see where the gold price goes, if it becomes another safe haven type move. Maybe China does sell all those treasuries that they own and start moving more into gold. We'll see. I mean, those are just kind of speculations on my part, but always appreciate your time and your insight, and there's a lot to cover here. Thanks so much, Chris.
Okay.
Do go National Investor. You can follow Chris over on X at Nat Investor, and he's obviously going to be pretty frequent here on the podcast this year. All right, we'll be back here more from Mining Stock Daily later today. Stay tuned.